This $60 investment per month that you're putting in has the potential right now with the digital age that we live in to make you as much money as you want. The system is being created to purposely keep you at a certain level so that they can control you financially. Why wouldn't they educate you before you purchase this credit card from us? Here's a couple of things that you need to be made aware of. If I have $10,000 and I use $1,000, that's 10% utilization. With $100,000, that's 1%. Now imagine when you have it at $1 million. So if you really want to get access to $50,000 to $100,000 in credit from any of these banks and institutions, you gotta.
So Jay, welcome to the Attractive Mindset Podcast, man. Heard a lot of great things coming from you from a lot of great people. So by natural, just proximity, we had to bring you on the show. But yeah, Jay, man, how's it been?
For sure. I appreciate it, man. It's been great. Love living in Florida now. All right. Coming from up north. I keep hearing all the stories about all the snow and whatnot, but yeah, Florida's been really cool, especially a lot of opportunity going back and forth from Orlando to Miami. Had to stay away from all the busyness of Miami, but it's been cool, man. And same with you, man. I wanted to definitely hop on here and get the chat. Like I said, once I get out of here and I start listening to season 1, now we're bringing in season 2. You brought me in for the first episode, so this should be exciting.
Absolutely. And so, one of the things that I read on your profile, we're going to get right into it, is 50 to 100K in funding. Tell us how.
Beautiful. So the way that I approach it is I start off by teaching people about how to take a look at what's going on in your personal profile, right? What's going on with your credit, get you to a 720 plus. Once you hit that 720, now we start talking about the different banks that you actually want to build a relationship with. So I'll give you guys a couple now too, a little teaser, right? You want to work with Chase. You want to work with PNC. Of course, Amex, because of all the bonus points and then the travel rewards and things that you get, right? But then there's also some unknown banks and credit unions. Like we have Orlando Credit Union that people don't know about up by where I'm staying.
I've never heard that.
Right? Yeah. So there's hundreds of thousands of different credit unions and banks out there that if you just start looking in like local registries and things like that, you'll find them in your county, right? And then you'll hear about Navy Federal, PenFed, Apple Credit Union, DCU, Citizens Bank. Like these are some of the big names that most people predominantly are going to recognize, okay? But then here's where it gets saucy. So if you really want to get access to $50,000 to $100,000 in credit from any of these banks and institutions, you got to show them that you're ready to come to play. So how you do that is you put money in the banks. So we're able to get somebody a $50,000 approval when they put 5 to 10K in a checking account.
Got it.
Once you let it sit and it sits there for about 30 days and you submit that first application, you get your approvals. All right. Now, another thing, like with Chase, for example, and all these other banks, people might not know that there's reconsiderations. So just because they denied you the first time doesn't mean that it's a 100% denial. You can call one of the 1-800 numbers for reconsideration, and then boom, they'll let you know if you were approved, and they just needed to do an identity verification.
Oh, wow.
So that's a little hidden gem right there too that people don't know, whether you're doing this for yourself or for your businesses. Those are 2 quick things that you want to take into account. Before you ask for money, you got to show them you have money. And then when they tell you no, it just might mean no right now. You just have to identify yourself to them.
So is that more critical than you would say? Because I know they might ask, how much do you make a year, blah, blah, blah. Is having actual money, 5 to 10K in a bank account, more critical than them, knowing how much you do a year?
Yeah. So in some cases, we'll have somebody that's probably doing less than $50,000 a year. We won't have to lie in the application, but just because they have $10,000 sitting in the bank, they'll get an approval. All right. Now this is the stuff that usually gets people in trouble because they'll go on publicly and start disclosing this. But on these applications, they're not doing income verifications if your LLC is structured the right way. If you've been around for over 2 years and you have money sitting in the bank account and they see that $10,000, and then on your application, you put that you're making $200,000, $500,000 a year plus. If they see money sitting in your checking account, why would they question you? Right. But if you walk in and you've got a zero balance in there, you've had the account open for 30 days, nothing has happened in transactions at all. Why would they fund you? And your LLC is under 2 years old. So it's like you just got to have a little bit of a strategy on how you're going to approach them to make sure they can work with you because they want to work with you. They're in the business of lending and borrowing money. right? So they want to give it to you because they know if you mess up, they're going to get paid. Or if you carry over balances, they're going to get paid.
So in the credit repair / credit funding field, you know, what is the biggest misconception you feel like people deal with or people expect?
Yeah. So a couple of things is, let's talk about like with credit, for example, right? People think that it takes time to mess up your credit, that you can just overnight get everything swiped off of your credit. It takes time to also get some of that stuff done. And I know that, you know, we can get into all kinds of discussions about credit repair companies and people who do this stuff. And some guy promising like 30-day deletions and all that. And I started to shy away from that for the simple fact that I don't want to get headache clients, right? So I like to be super upfront with everybody about everything and let them know that in order for us to take you to funding, which is what I focus on, we have to focus on the quality of accounts on your credit, right? So it might take me 3 to 6 months in order to remove this one account. We might have to do a little bit trickier things to get you, you know, more qualified to get there. On top of taking things off, this is another big misconception. You have to add good history. So I can delete all the negatives, but that doesn't qualify a good 720 score.
Got it.
So if you have 10 late payments, I take off your 10 late payments, but you only have one credit card with a $500 limit. Do you think I should give you $50,000?
Absolutely not.
Right? It's like saying, would you give an 18-year-old $1 million to go run a business if they don't have any prior education or experience? Right? But if they can show it, even at 18, that they have had the ability to manage $50,000, right? $100,000, then you have no problem giving them that money. And then now we get into adding the good history, getting an authorized user for your kids early. So you don't have to be 18 years old to build credit. Another big misconception.
Got it. So with the authorized users, after you clear everything off, that's the next step before they actually get the funding, is to build that history first.
Yeah. So there's a couple of things. Everyone knows about the Navy Federal play, right? Where you can get a pledge loan or a secured loan. It sounds a little bit more confusing than what it really is. Basically, you're giving them money. They're reporting it on your credit and giving you your money right back.
It's like NAV.
Exactly. Just like NAV, right? The boost. So you can do that with a couple other companies, like PenFed does secured loans, but you got to sit the money there for 30 days before they actually process it. Well, to take it a step further, right, you can get authorized user accounts from other people, those trade lines and whatnot, but it's better to do it with your family, especially if they have good credit, because then now you don't have to get them taken off. Okay. If you're doing trade lines and you're doing like, you know, borrowed lines of credit from other people that you're paying for, within 60 days, they're going to take them off. That's their business.
Got you.
But imagine your kid turns 12 years old. You add them to all your credit lines, right? You've got over $100,000 in available credit. You've never had any kind of negative history. By the time they turn 18, and 6 more years before they even head off to college, they have access to their own $100,000 in personal credit lines.
So then I'm going to pose a very controversial question.
Yeah.
You know, why do banks still give out debit cards when we shouldn't really have debit cards and we live in a world of credit cards?
Okay. Does it benefit me to educate you when I'm making money off of you? And let's talk about what happened with Apple. Why is Apple's contract being canceled?
I didn't even know that.
Yeah, so people didn't know that Apple Card, for example, right here on our awesome Apple iPhones, right? Did you know that Apple tells you if you pay an extra $200, you can save yourself X amount of interest? So that's amazing for you as the consumer, because now you know, oh crap, you know what? Let me not play around. It's 15 days before my due date on my card. I can save $30 in interest if I pay this extra $200, right? Okay, as a bank, that's terrible for my business model. I need you to pay that $20. Not only do I need you to pay that $20, I need you to pay that $20 every month for the next 2 years. I want you to make your minimum payments. I don't want you to pay it all up front. That's why they do that. Their business model is in collecting on debts. They're there on collecting on interest that you owe them from the money given to them by their other investors, us, right? The moment I put in my $10,000 into the bank, they take 1,000, leave it into the vault, right? That way they can pass regulations, right? And not get flagged, not get in trouble. They take that other 9,000 and they loan it out. They put it to work. They put it into investments, right? So it's sitting in your credit cards. And every time you make a late payment, you're paying the bank and you're paying somebody else because that's their money.
Wow.
right? Every time you're paying on interest, you're paying the bank for that, right? Your debit card, it doesn't provide the same amounts of securities, right? So when you overdraft, there's a charge for that. When you get chargebacks, so this is something that's more common on credit cards, but when you do a chargeback on a transaction on a debit card, if it goes against you and they find out that it was fraudulent, they'll charge you for that too.
Wow.
Right? If you overdraft your debit account, not only am I gonna in 7 days charge you for it, in 14 days I'm gonna charge you for it again, in 30 days I'm gonna charge you for it again.
Sheesh.
And then on top of that, I'm gonna mess up your Paydex score. Not your Paydex, excuse me. Now I got into business. Your Paychex score to increase your risk, and now you can't get another bank account with another institution. So you know what that makes you do?
You're stuck there.
Now you're stuck. So then now you have to pay me back to grant you access to the same account that you just messed up.
Damn.
And then in 30 days, if you mess up again, I'm gonna shut down your debit card again. So the system is being created to purposely keep you at a certain level so that they can control you financially. So, and I know this sounds like maybe I'm being a conspiracy theorist here, but otherwise, why wouldn't the same banking institution that supposedly cares for you so much provide all these educational content in advance? Right? Why wouldn't they educate you before you purchase this credit card from us? Because that's what you're doing. Before you enter this contract with us, here's a couple of things that you need to be made aware of. Why do they put it in fine print?
So what do the credit card companies do better than the bank systems do then?
So the credit card companies are very good at telling you the pros of working with them, right? And also providing you the securities and perks of working with them, right? So I'll give you an example. This weekend, I had to rent a car from Enterprise, right? Now, what's the typical standard process when you come in to get a car from them, right?
License,
give them a credit card, they take a deposit, they do the whole nine, right? Then they ask you, what kind of insurances do you want? Okay. Did you know I didn't take any insurance?
Because you had your own.
No, I don't even have my own. My credit card covers me on collision.
Oh, wow.
Yeah. So some of these credit cards, they have these extra perks and benefits that a debit card just doesn't, right? I have a 100% transaction coverage on my credit card that my debit card, I don't. It could take 90 days for an investigation on a fraudulent transaction.
Oh, damn.
Another thing, what is the credit card company doing to incentivize you for using their money? Cash back, for one, right? Travel rewards and points. Whenever you spend on food for this one specific credit card, 3x points. So every dollar counts 3 times, as opposed to a debit card where they give you nothing, right? Then why are you leaving your money in savings accounts that are just standard and flat and checking accounts that are standard and flat? They don't teach us that you're supposed to put it in high yield savings accounts, right? That are now going to pay you out at 4%, 5%, right? They don't teach you which savings accounts to put it in to build a relationship with the bank.
Yeah.
For example, Amex. Why would you get the Amex high yield savings? Because now you're in their system, and when you're ready for a credit card, you are more easily approved. It's called data mining.
So how exactly do the credit card people win? Let's say you get a $10,000 credit card from Discover.
Yeah.
Right. And so if you pay everything on time or with the knowledge of the information, like, hey, my best pay date is 15 days prior, to my due date, I'm going to pay it off here and do this and that there. How are they winning?
Because now you're going to then become a spokesperson for them. You're going to talk about how great Discover is and tell the next person. But what are the chances that every single consumer is going to do that? Just let's do statistics.
You're right.
Remember, they're in the business of failure. They want you to fail because they know you will fail. It's in your nature. If you were better educated, right, and you knew how to manage these things properly, then there wouldn't be so many restrictions to getting access to these things, right? Because they wouldn't have to worry about you paying them back. That's why the system is built this way.
Knowledge. We've had quite a few credit people on here, and you've broken things down and even spoken on certain things in a way that hasn't even been articulated. And so how'd you get into this realm?
It's kind of funny. So I tend to be vindictive about silly things, right? I went to college. I did 1 semester. It wasn't for me. All right. I'm going for computer electronic engineering. I speak to the engineering lady. She's from overseas. She's from Germany. She was like, I teach here, but I'm noticing that I think I want to leave. I used to work at McLaren. I used to do this. I used to do that. Tells me her whole story. And she says, what's crazy is you're going to get out of school from here. I can't say her name because, you know, she's I think she's tenured now. But she says, you're going to get out of school and not even be able to get a job. And I said, no way. She's like, well, you don't have any experience. You haven't done any internships. And you're walking in as a brand new freshman. When most of the freshmen that I'm talking about for the thing that you're studying right now, they've already been studying for this stuff since before high school.
Damn.
Right? So I'm like, what the heck? This is just engineering, right? Like, it's not supposed to be that difficult. Wrong. If you want to play and get to the $200,000 rung of the ladder really, really quick, you have to be doing things before you even get into college. Now, that might not be the case for other people, but I grew up in Long Island, and I know how relationships work.
What part of Long Island?
In North Shore, in Huntington.
Okay. Yeah. I went to Bayshore High School.
Oh, that's fire.
I got expelled though, but I went.
We'll talk about that off camera, right? Yeah. But yeah, so I went to Huntington High School, right? And it was very different than where I initially grew up in Washington Heights in New York, right? You know, I can't say certain things. I can't curse a certain way and things like that. They're going to call Mom Dukes. Right. But hanging around these people, you get to see how they build relationships. Everyone knows everybody. The teller at the bank is somebody's son or daughter, right? It's very much, how do you call this? A relationship-based community.
Who you know.
It's all about who you know. Right. I was able to get the jobs that I got in corporate America with no degree over people that were on paper supposedly more qualified because somebody put in a good word for me. And on top of that, I had more experience than them live in the industry as opposed to just on paper. See what I'm saying? A lawyer on paper is not the same as a lawyer who's got 20 years and 500 cases.
Facts.
Right. Which lawyer do you want? Do you want the one just coming out of Yale or the one who's been working in New York City, the pit bull?
Yeah.
Right. So that kind of gave me a perspective the same way about finances and credit. I need to get exposed to this stuff. I need to see the craziest things possible, right? So I just started picking up little skill sets here and there. I get into sales. I'm doing this. I'm learning about customer service and all that. And then I get out and I try to get an apartment. I get denied for an apartment. So I'm thinking I'm building the other skill sets I'll need for my life when I miss the most crucial one, which is financial education, right? I'm thinking I'm great on accounting because I know about budgeting. I got myself out of all this debt, $48K for one semester and a whole bunch of credit cards. And I thought I knew enough then, right? And then I get denied for an apartment because my FICO score is lower than what they were expecting. So then I just start going down a rabbit hole. What's a FICO score? I've never heard of this thing. I know what a credit score is, but what's a FICO? Then I'm saying, okay, what's a Vantage? What's Credit Karma? Why are they giving this to me in my banking app? What are these banks? Then I said, what's consumer law? Why does credit repair actually work? And then I start seeing all of these things. And then progressively over time, I get introduced to a lot of people. And I just keep having that hunger. And I want to know what's the next thing. Okay, after you fix your credit, how do you make your credit look better? Why is this 700 profile getting approved for whatever credit card they want and this one not a single thing? And I'm like, oh, it's because this one has 10 years of history and this one only has 3. Okay, well then why did this same identical profile, 10 years of history, auto loan, mortgage loan, everything paid off, everything fantastic. Why did this one get 50,000 but this one only get 10,000? Oh, that's because this guy over here had a credit card with $10,000 on it and this guy had a $500 credit card. Even though it was the same 10 years of history, 10 years of everything, but the banks didn't trust them in the same way. And then just by taking note of these different things, I started seeing things. Then I'm buying all these courses. I must have invested between me and my partners probably $100,000 in all these courses on every big name under the sun. I won't put them out there because you know we don't need to give them no more clout, okay? But I'm investing into all these courses, and then I'm seeing, in some cases, not always, I'm getting superficial information, but not the stuff to take my business over the top. Maybe it's because they didn't know, or they just didn't want competition, or they just wanted to upsell me into the next thing. So I said, cool, no problem. I'll do the grunt work. So then I start studying the different banks. I start submitting applications for free for random people. And then I start learning the different numbers that you need to put into these applications. Then I learned Chase doesn't check for your income. They don't do an income verification if everything is correct. This 30-day-old LLC will qualify if the personal credit is looking good.
Oh, damn.
But this 2-year-old LLC won't qualify if the personal credit is not looking good.
Gotcha.
Right? And then you just start taking note of that stuff, and then you start making your own SOPs and operating procedures to be able to just put it on a pipeline. And then you can hire a VA, and then the VA does all the applications for you. And that's how the business model became what it is now.
Sheesh. That, how descriptive you described that, I was able to visualize exactly what you're talking about, not even being a credit person like that. So when somebody comes to you, what is an automation process or step that you have now for them to go through where you can say, hey, if you have this over the next 30 days, I can help you over the next 90, a year, whatever.
Sure. So my programs work in one of two ways. All right. There's the starter and then there's the let's ball out. Okay. The starter program over the next 12 months, anything that has to do with your credit, with getting it corrected, that comes included. You're not paying me a dime for that. What you're going to pay me for is telling you what banks to work with, how much money to put into those banks. All right. What credit cards to get, what secured credit cards to get, where to put your money to start earning a return on that money. That's what you're going to pay me for. Okay. So the reason I have to do it over 12 months is because I don't know what your learning curve is. I don't know if you're going to get everything in the first 30 days, or I don't know if it's going to take me a full year to like finally get it sink in your head. I don't know if within those 12 months, an emergency might happen, which is what people don't account for. And you need to make a certain expense, or you need to max out a credit card. So if any of these things start to happen in between the process of us working together, I have to account for those things. That's my first little piece of automation, right? I'm putting the customer service on autopilot. I don't want to hear anything from you because we're not supposed to do anything up until month 12. Okay. But in month 1, we take a look at your profile. We do a full audit and I explain it to you. The next thing is I tell you, here's how we're going to add 2 to 5 years of history that you're missing. Then the next thing after that is here's the 5 major crucial banks you want to have to get a good auto loan, to make sure you're getting good pre-approvals for houses, right? My mom's a realtor, so I started learning about that stuff and adding it in there. All right. And then lastly, just to make sure you can get some money. Then after we do that, over the next 3 to 6 months, it's actually growing these relationships, getting those right accounts, making sure they're reporting. So that way by month 6, if everything on your credit is situated, you've got at least 3 years of history now reporting on your credit. You've got at least one credit card with a $10,000 limit. You have the $10,000 liquid to put into the bank account. Like I told you, you can get your first $100,000.
Sheesh. So, okay. So, what would you do as like explain the difference to not only myself, but some people that might be watching, the difference between, 100,000 in personal credit, 100,000 in business line of credit, and 100,000 in a loan.
Sure. So a loan is a one-time transaction, right? You get 100,000 now and that's it. You can never touch that money again. You have to make a new contract. You have to reopen and requalify and restart the whole process, right? But what happens if throughout the process of you paying back this loan, again, an emergency comes up and you no longer qualify for the same $100,000 loan, right? That's a one-time transaction, a one-time deal. All right. Now, in some cases, if you did the right thing and you're still qualified, they'll give you more on a loan. Okay. Very important things about loans. Their interest rates tend to be a lot better than what you're going to encounter in revolving accounts or credit cards or lines of credit. Okay.
Got it.
They tend to be a lot better. Also, they offer very flexible repayment periods. So depending on the kind of loan that you're getting, whether it's an equity-based loan for a house, a securities-based loan for your stocks and investments, which goes back to the accounts that I was telling you. You got to learn what accounts to open and why. Or, just a general personal loan, right? Or an educational loan, right? When you look at educational loans, some of them are accruing interest from the moment you're in school. Some of them don't, right? And it depends if it's, from the federal government or from a company like Sallie Mae and so on and so forth.
Got it.
Then you got your HELOCs. So some of them, those interest rates are locked in. Some of them are variable, right? They're based on the equity of your home, and it's only going to be a percentage of that equity so they can guarantee their money. Remember, they're always in the business of collecting.
Yeah.
All right. A securities lock, same deal. Specific interest rate, but now only a percentage of how much you have in stocks or in other securities and other things that they can claim value from. It's usually not going to go over 50%. Okay. And then you have, again, your standard loans, but now they're going to qualify you based off of maybe your personal history as the individual. So they're going to look at your credit to see what you're good for. Or for your business, they're going to look at what's going on with your business. But then again, if your business doesn't qualify because it's 30 days old, what are they going to look at? Your personal credit again.
Got it.
That's loans. Now let's get into lines of credit.
Mhm.
So lines of credit are a little bit like loans, but they're more revolving now. Now, why do I say that? With a line of credit, it's a pipeline you can tap into whenever after you've made your payments back. It's just like a credit card, but you don't actually get a physical card. Okay. You can withdraw money from it into your checking account. All right. And then you just pay it right back and it goes back into your line of credit. Okay. The interest rates tend to be better than credit cards. All right. They tend to have like those regular 30-day payments and repayment periods and things like that. But lines of credit are more likely to get you higher limits than you will on a credit card.
Got it.
Okay. The credit card is built to have you spending on every day. The line of credit is just there as, in my opinion, a backup.
Got it.
If we're talking about business operations now, I'm getting you a line of credit not for you to use it right away immediately. I need you to use it on an emergency. Right? That line of credit allows you to expand your business, to purchase more equipment. Let's say, right, when you guys are expanding in here, you want new mics, you want new cameras, cool, use your line of credit. Or if you're smart, you're going to use your credit card. All right, your credit card gives you the points. You take the line of credit because it's a smaller interest rate and pay the credit card with the line of credit. And then now you pay back the line of credit. Okay. Some of them are made different. A line of credit, every time you take out money, they might charge you a transaction fee. So it might be $50. It might be a percentage of how much money you're taking out. Right. And then you got your credit cards. Every transaction you're doing with a credit card, there's no fees for it. There's only a repayment. And as long as you pay it off before the 30th of the month, before that 30-day cycle is ready, or like a charge card, right? As long as you pay it off before it's due, you don't pay anything over. There's no extras. There's no interest rates, right? But you get rewards for using those different systems. And again, it's all built on the hopes that you forget or that you mess up.
Got it. Okay.
Right? But credit cards carry a much higher interest rate because they're built to be used in everyday transactions. Lines of credit and loans are a little bit more specific to certain scenarios, right? Lines of credit are backups. Loans are specific, like you're buying a house, you're getting a car, you have this emergency expense,
Got it. And so, how does somebody get, I've heard of these, you don't have to pay anything back in your first year.
Yeah. 0% interest.
Yeah.
Right. So with the 0% interest, it's kind of like a promotional program. Every bank has a gimmick because once you get to the billions and trillions, there's not really a lot of new market that you can bring in. It's all about market share, right? So how can I take $200 million from Chase, right? How can I take $500 million from Bank of America? How can I take the next 20 billion in the new 18-year-old consumers from the marketplace? We put out gimmicks. So, hey, we'll give you 18 months of 0% interest, meaning for the next 18 months, if you spend 10K and you don't pay off the full 10K in the next 30 days or so, no interest. It stays 10K, right? You just pay your minimum payment. On top of that, we're going to give you 60,000 in reward points that you can spend on other things and free flights. So that's how they do it. And they create kind of like these gimmicks, as I like to call them. Every bank has them. You just got to kind of like look in and see 0% interest lines of credit, 0% interest credit cards. You can Google them and find a bunch. But especially the big banks, they always have them available. If we pull up Chase right now, I guarantee you'll see it. They even have it as a category, right? And again, remember what I said at the very beginning. It's in the hopes that you mess up, because 12 months later, you're going to carry over that balance and one or two things happen. There's two kinds of banks out here, the ones that like you and the ones that don't. All right. The ones that don't like you are the predatory banks. All right. They're your credit ones of the world. They'll give you 6 months of 0% interest and charge you all the back due interest on any balances.
Oh, damn.
Oh, people didn't know about that.
That's fine print?
Fine print.
Oh, damn.
Right. Another thing, the interest rate is at 30%. Ooh. So now you've got this 30% over the past 6 months. This is one of those banks that don't like you.
Damn.
Right? The banks that do, they may not charge you on all the back interest over 12 months, but now that interest is going to kick in on that $10,000 balance. So because you're becoming unassuming, forgetting that you've got that 12-month APR for free, you think that, oh, okay, no worry, I'll pay it next month. That's the mentality that you get brought into. So you see how you're talking about the attractive mindset?
Yeah.
Right? You have to be mindful of these things.
Damn.
And that's why I dove so deep into the financial literacy. I dove so deep into the law. I dove so deep into reading the fine print and finding out that I didn't have to pay insurance on this car. Right? If I get into an accident, I only have to pay $500. they take care of the rest of the balance up to $35,000.
So that's technically your deductible.
Yes.
Wow.
$500 is my deductible.
So does that apply to
company.
your car as well?
No. So
Okay.
with my personal car, of course, I need insurance, but with rentals, I don't. Yeah.
Okay.
And there's more stuff that we could get into that these credit cards give you access to as well.
Let's get into it, please. Share.
Right. So prior to the show, I was telling you about travel hacking and all these little teeny tiny things in between that people they may advertise. These are also kind of like little gimmicks, right? So these banks, they partner with other major institutions to attract new clientele and take on more market share. So for example, you ever seen I think it's the Delta Amex card?
Yeah.
Right, where you get like rewards for every time you book for Delta, or you get travel rewards anytime you spend dollars on other stuff.
Yeah.
Right. So did you know that it comes with a certain status for Delta? They call this status matching. Okay. So now let's make believe you become a diamond member with Delta. Well, what the other companies do is we want you to buy from us too. So we'll match your diamond status. So now you go over to American Airlines and they'll say, yeah, we take Delta customers. You can get the same benefits from us and build extra travel miles. So now you do a status match. And then now you're getting the same benefits from two different companies.
Wow.
And then American Airlines has a credit card for them too. So then now they try to sell you that credit card on that website now that you're a member. And they start advertising these emails to you.
Yeah, Delta I see everywhere because Delta has something I believe with like Lyft or Uber where you get like the
Lyft
Uber
and Uber credits,
and
right?
all
The
of that
TSA
stuff.
pre-check. So like I get the pre-check stuff. So if pre-check is not open, I can go to Clear and then I get Clear credits too.
Just from having Delta.
Yeah, or from one person getting Clear and referring a family member, they get it for like X amount of dollars. So every one of these companies has these little benefits. But now we get to the cars. So I have Executive Elite with Enterprise, National, and then Avis. They're all one big company, right? So I went to National. I got the car. As an Executive Elite, I don't have to fill out a contract or nothing. I grab my phone, I put in the reservation, and I go. The same vehicle, if I booked it without my discount codes and all of that stuff, is going for, I believe, $130 a day. I got it for $60.
A day?
A day.
Sheesh.
Yeah. Now the insurance, $15 a day, right? So if I have it for 3 days, that's an extra $45 that I'm tacking on there plus the taxes. $0. If I get into an accident, I bang out, which I did recently. I had an i4, right? Pretty expensive car.
Credit card.
Yeah, credit card covered it.
Wow.
On the deductible. I paid $500 with the same credit card that I put down, and that was it. They sent me some paperwork. They said they're gonna email me, send them the police report, all that stuff. Haven't heard from it since. That was 2 months ago.
Damn.
Yeah.
So Executive Elite, how does somebody become Executive Elite?
So for Executive Elite, there's a couple of ways to do it, right? So there's a status matching sequence, right? You want to become a diamond member or a president member with, let's say, Hertz, a presidential club member, and then you can take that same membership and go to Enterprise and say, hey, can you match my status? And poof, they'll match it.
And so how do you get to that level of membership? What do you have to do with anyone first? Like the first person you go to?
So there's one of two ways. Number one, you have the credit card, which gives you the status automatically. Or number two, you spend X amount of money.
Got
right?
it.
And then all three would be just to have a status with somebody else already.
Got it.
So here's a little hack. If you're already staying with Marriott and Hilton, you're accruing points. So what we do is we log into one of our friends' accounts and we just change the names. And then now you submit the information and they give it to you.
Wow.
And now you get the status match. So now that I've got the status, I didn't have to pay. I didn't have to stay a single night on anything. And I can go to all of these companies and have them match me.
Wow.
Yeah.
Listen, I told y'all season 2 is nothing but monsters coming on here. The gems that are being dropped is absolutely insane. And so, okay, so what, dream with me a little bit,
Cool.
or give me reality.
I got you.
So what is the highest amount of money that you can get with the highest credit score and the best profile possible?
Okay, so the best profile possible is going to be an 850 credit score, right? I've seen that a handful of times. I will say that. Look, I'll be honest with y'all. I don't have an 850. Okay. An 850 credit score means a couple of things. It's probably that you're not really using your credit, or you have so much credit available to you that even when you do use it, it doesn't affect you, right? So how do you get to that level? You can get access to anywhere from $3 to $5 million in actual revolving credit for yourself as a person plus in a business. Okay. Now, realistically, if we're talking big money, you can, of course, get a lot more credit from major institutions and banks. Like if I walk into Chase today with an investment plan for some kind of property or something, they'll give you 500 million. They'll give you way more. But that's now we're talking about some other stuff. As general revolving credit cards, lines of credit and things like that, you can get anywhere from 3 to 5 million. When was that last one?
3 to 5 million. Now that encompassed it, you know, wow. So 3 to 5 million with an 850. How does somebody get to an 850?
Sure. So getting to an 850 encompasses like a couple of things. You want to have things that do get paid off and things that are open and still not paid off. All right. So I'm going to give you a couple of hacks right now that you can start using. It's about age and amounts of credit that you have available. All right. So the reason why I start people to 50 to 100K is because that's your first stepping stone to get to that 850 score. Okay. The more credit you have available to you, the less it impacts you when you do need to use it. Right. If I have $10,000 and I use 1,000, that's 10% utilization. With $100,000, that's 1%. Big difference in between the two.
Absolutely.
Right. So to get to that same 10%, I get more money's worth. I get to use 10K now. All right. Now imagine when you have it at $1 million. How much is that same $1,000? It doesn't even matter. It's so minuscule. Yeah. Right. That's how you maintain these high scores. The more money you have available, the higher it's going to get. And then again, I said the age. So instead of starting your 18-year-old kid building their credit now, or somebody who's listening right now, 18, 20, 22 years old, you got to start now. You got to get access to all of that money now. And you have to be disciplined enough to not use it, not touch it, unless you absolutely have to. If you are manufacturing some kind of spend, which we can get into, right, to keep those lines open or to increase your lines of credit, then you have to be responsible and not spending it on something stupid, right? Because you still got to pay that money back, and then you can mess yourself up long term. It's a planned event to get to $1 million to $3 million to $5 million in credit. It's an entire planned process. It does not happen by accident. Okay. So to build up that age and history takes time, right? Some of it could be time that you have to wait on accounts to age. Some of it could be bought time, which is those authorized users and things like that. Or using things like rent reporters to report 2 years of history. Or you can purchase into other assets that require large periods of time to pay.
So wait, go back to rent reporters real quick.
Okay. So
try to skip over that.
Well, I was going to come back to it. So for example, rent reporters, all you guys could do this right now. This is a little hack. You go on rent reporters, you put the landlord as your mom, your dad, or something like that, right? They may have to produce some documents. So just listen in, have the call, and ask them what are the requirements to get 2 years of my rental history reporting. Okay, boom. They'll tell you exactly what they need. They'll call to verify with the landlord, AKA Mom Dukes. She will say, yes, so-and-so pays $700 a month and has been paying on time every single month for at least the past 3 years or 2 years. Rent reporters just gives you 2 years of history, just like that.
Wow.
Just like that.
And that adds to your entire credit profile.
That adds to your whole profile. Then you take it a step further. I told you about authorized users. Now, if Mom Dukes has 10 years of credit history with $40,000 or even just $10,000 or $5,000 with Capital One, right? Let's say Capital One. She can add you as an authorized user. She cuts the card so you don't use it, right? And then she just makes sure she doesn't put any spend on that card. You now have 10 years of history added onto your profile that you're borrowing. Plus, you've got 5K of credit that just showed up. All right. They know you're an authorized user, but you wouldn't be trusted with it if you were not responsible. So that's why authorized user and trade lines still work. I'm not a fan of them, but they still work. Okay. Then you take it a step further. Did you know you could buy into auto loans?
Buy into auto loans?
Yeah. It's called swap a lease.
What does that even mean?
Yeah. So someone will get a lease or they'll get financing for a car. What's your favorite car right now?
The Audi A8.
Audi A8. Okay. How much is that for, let's say, MSRP straight off the lot?
$137,000.
$137,000. Now, what's the average length of that loan?
Probably
60 months,
like
75 months.
Yeah.
Cool. So 60 months is 5 years. right? What if somebody has that loan? They've already made 4 years worth of payments. It's already paid 80% off. Did you know you could buy into that line of credit?
You could. It just sounds so crazy. Buy into that line of credit, like through the dealership or through the bank?
Through the person directly. They can add you to it
as like
an authorized user. So what do you think co-signing is?
Wow.
So now you can buy into that. It's $130,000 car. It's as a loan that's getting put out for this car. It's showing up on your credit as 80% paid off.
Damn.
Do you think a bank is not going to want to give you some money now?
Yeah.
Right?
Damn.
Let's take it a step further. Now, I'm sure you've seen some of these people driving these Lambos, these other cars, right? These exotics. And they're getting into like vehicle rentals and like renting out the Phantoms and, you know, renting out the Urus, right? The new Performantes and all that. $350,000 for the car. Do you think they're taking standard leases for that stuff? Or standard financing?
Never thought about it.
Absolutely not. They offer a whole different line of financing. You guys can look this up. It's all over Instagram. There's a bunch of people that do this. Woodside Financial, right? 180-month lease for the same car. It knocks down your payment from $3,000, $4,000 a month to like $2,000.
So that's how a lot of these people are getting the exotics. Wow.
Now, let me put it a step further, right? Because now you and your boys got your credit straight, right? One of you guys qualifies for it on the profile. It's a $2,000 bill now. What if 4 of you guys just split it as co-signers? So $2,000 becomes a $500 bill between 4 of you guys. It's reporting on all 4 of your profiles. And then by the time it gets fully paid off, like it gets to that point down there, now it looks real, real sweet.
For everybody.
For everybody.
That is crazy.
Yeah. Yeah. So that's the stuff we're getting into now. Now we're getting into, with my partners and I, we're getting into like finding the right vehicles to finance. Cause we there's this guy, something Teak on IG. I'm so sorry. I'm trying to give him a shout out, you know? But he shows you how to buy the right cars to upgrade into the next car. You mentioned the Audi A8. Did you know that Audi is connected to Porsche, is connected to Lamborghini?
I didn't.
So there, if I'm not mistaken, I could be wrong here. So anybody feel free to correct me after the episode, right? I believe they all fall under the Volkswagen group.
I do. Yeah, the parts definitely are made by VW.
Yeah, they're all interchangeable, right? What people don't know really is that a Lamborghini is a mix and match between like an Audi Q8, right? A Porsche Cayenne Turbo, and then I think they have like a V8, a Volkswagen, right? It's a cross between all of them. It's just got prettier parts.
Damn.
Right? It's no longer Italian made. It's all German now. Okay?
Wow. So
when you look into the actual vehicle and the financing and all of this stuff, you end up finding out, oh my gosh, they all use the same banks. It's all the same company. So if I have on my report that I did financing with Audi, Porsche, or Volkswagen, they're going to love to give me this Lamborghini financing. See what I'm saying? Or BMW, and if I'm not mistaken, it's Bentley.
Yeah.
Right? So you have a BMW. It's 80-90% paid off. You want to get yourself a nice Bentley GT Continental. There it is. There's your in.
Wow. Okay.
So there's levels to this financial stuff. You see what I'm saying?
Wow.
And how to actually execute. So like, I don't like holding this stuff back. Here's how you execute, right? It's great that I told you all this fancy schmancy stuff, but the way to execute is you need to have 100,000 in available credit. You need to have that much money. For some people, they might say no, but I want to do it correctly. So if you want to do it the right way, get the best rates possible, get approved for whatever you want, whenever you want it. You want to have $100,000 plus in personal available credit. You want to let it sit for at least 8 months to 1 year, which is why my program is for 12 months. And after you've done all of that, you can qualify for whatever you want. You can get any apartment, you can get any house, any mortgage, you can get any car. Doesn't matter.
At the lowest rates possible.
At the prime rates.
Wow.
We get people credit cards from 14% interest down to 7% interest. I just did it for like 6-7 of my students. It's nothing fancy. Did you know you can call and ask them to reduce your interest rates?
What?
That's another thing.
Any credit card?
Any credit card. Specifically credit unions though, right? What about if you have a $200,000 line of credit at 5% interest, but you have a $200,000 car at 7% interest? Why
That's
don't
a
you
big
just
difference.
take the money from your line of credit to pay off the car? Now, if it's 0% interest over 12 months, you have 12 months to pay back that line of credit. So you went from paying 7% interest on an auto loan. Now that auto loan is fully paid off on your credit. It switched over to a line of credit. So now there may be some fees and other things associated to it, but now it's 0% interest over 12 months. Now, if you can manage it, if you're somebody who has money and can actually do this, you pay off your line of credit. And now you ask that bank for an increase in the line of credit and an interest rate reduction. And you now have a paid off vehicle with $130,000, $200,000. Your profile looks stellar. You're walking around balling. You can get whatever you want.
Wow.
Right? So I tell people this all the time. You can keep buying all that Louis, you can keep buying all that Gucci and all that stuff, or you can start buying some credit. Because they got that up for auction.
I see. Wow. It's these hidden gems that people don't know about. So I'm going to ask you one of the more popular questions that been circulating the gram nowadays.
Yeah.
Would you take 50 million up front or an 800 credit score?
50 million up front. I can buy a score. Everyone says, no, I'll take the credit. I'm like, yeah, but what is the profile made out of? That's what they didn't add into that little thing. So I know the ins and outs. I'll take a $50 million payout up front. I'll take a $500,000 payout up front. I'll take a $50,000 payout up front. You know what I'm going to do? I'm going to go build my 850 credit score. I'm going to take $20,000, put it into one secured credit card. That's going to sit there for the next 6 months. They're going to give me my money back because I'm not touching that card. I'm going to take the other $25,000, right, and start buying all these different things. I'm going to get Rent Reporter, call one of my partners and say, hey, I've been with you for 2 years. This is the address that I'm putting on there. They're going to call you. Boom. Now I got 2 years of history. I'm going to go to all the major banks. I'm going to deposit 5 to 10K in each of those major banks, wait 30 days and go submit my applications. I just turned my 50 to 100K.
Sheesh.
After 12 months, I turned that 100K to 300. After 24 months, I turned it to 500. And then after 3 to 5 years, I got that million.
The sauce is crazy.
And it's all the same stuff I told you. Asking for limit increases, asking for interest rate reduction so I can keep making my investments. All right. And that's it. And then you ask for promotional offers. Sometimes they give you 6 months of free interest, even though you've been with them for 2-3 years. But no one calls.
And so when you call, that's just regular customer service you talk to?
Yeah, regular customer service. You tell them, hey, I'm not happy with you guys. Chase, give me a better offer.
That
then
makes
they say,
so much sense.
Mr. Sandoval, we're so sorry. We don't want to see you go. Let me see what I can do. Then they come back to you with some magical thing, just like Wolf of Wall Street. I've got, quite frankly, the best thing that's come across my desk.
Yes.
Okay. Then they'll come in and they'll say, what we'd like to do is reduce your interest rate from 18% down to 7%. Along with that, we'd like to give you the next 6 months at 0% interest because you've been with us for X amount of years or since 2017.
Sheesh.
You know?
Crazy. So let's say somebody opens a secured card and it can be, let's say, $5,000, and they've touched it, they've utilized it, whatever. How long does it take for them to get that below 10% utilization and leave it before they get their money back?
So you're saying for the secured card, it doesn't actually matter the utilization. Just don't do bad things. So what are bad things? Getting a late payment. That's bad because they got to report that as bad. If you max out the card, as long as you're making the rule that I give everybody, over 50% of the late payment. So not the late payment, excuse me, the minimum payment. So if your minimum payment is $50, put in 75 to 100. All right, put in $75 to $100. Make a little bit over the minimum payment. Pay it off as quickly as you can, right? Don't spend the actual $5,000 unless you really need to, right? So another one of the rules that I teach everybody is, do I like it? Do I want it? Or do I need it? If you like it, work for it. If you want it, you don't need it. And if you need it, go get it. So that's it.
Okay. And so ultimately they still have to pay that down before it turns into a credit card.
No, it'll be a credit card from day one, but
Mhm.
they're gonna hold your 5K as collateral, and they're
Mm,
gonna release it anyway. It's just, are they gonna release it in 6 or 12 months?
got it.
Right.
And-
So to qualify for the 6 month release, two things need to happen. First, you got to come correct. You got to get on the phone and ask them, when do you release my money? Some of these banks are tricky.
mm,
They'll tell you, hey, get a secured credit card with us, but they won't tell you that it's 12 months,
mm,
right? Over a certain amount. So if you go over $20,000, for example, they may hold it for 24 months or 18 months. They'll tell you what the terms are. It's all in the fine print. They don't openly tell you on their website.
mm.
Okay. If you get a late payment, you don't qualify for the 5K back. They give it back to you, but not within 6 months.
And so if you get a late payment, just to revisit that, if you get a late payment, that means like they actually mark your record.
Yeah.
And so if you get a late payment, they mark your record. Let's say it passes 12 months and you still don't have your money back. What happens?
If you still don't have your money back, you can call in and kind of argue with them a little bit. Just tell them, hey, it happened one time 8 months ago.
Mm-hmm.
Right. So this is why you have to read the offers as well.
Mm-hmm.
If it says that within either 6 months, if everything is good, or 12 months, if you make a mistake, you have to enforce it and tell them, hey, I read it in your contract. It's in your terms, specifically under here. And they'll go ahead and release the 5K. But again, they're not going to tell you.
And so even if, what happens if you pass 12 months and you don't have a mistake and they still didn't give you your money back?
That's impossible, because then you can just close your account and they'll give you your money back. They'll have to then. But what I'm saying is, like, it's impossible is because then they'll get into a class action. Because trust me, nobody in their right mind is going to let their money sit in there when they were promised a deal and now people aren't keeping up their end of the bargain.
Got it.
So if you mean to tell me that if I didn't mess up and I was supposed to get it back in 12 months, and I know I'm supposed to get my money back in 12 months, and we are now at 15 months, and I just remembered, and I call you and you tell me you're not giving me my money back, that I'm not going to take legal action or yell and scream or take to social media. And if I take to social media, especially these days, you think that it's not going to reach as far as it needs to find 2 or 3 or 500 of your other clients that you may have already done this to. Because one of the things that you got to remember, again, is that these are predatory practices.
Yeah.
Meaning they're doing it on purpose. Wells Fargo, right? Everyone knows they got in trouble because they were making savings accounts for you without telling you. So chances are, is if they're doing something like that, they're doing it to more people. And that's why the banks are pretty chill about that stuff. But again, there's banks that like you and banks that don't. The only banks that do that are the banks that don't like you.
Gotcha. No, that makes sense. Okay, cool.
So I'll give you a couple of those banks too, in my opinion.
The ones that don't like you?
Oh yeah, the ones that don't like you. Mission Lane, no good. Credit One, no good. Premier, all right. They have, I think it's called Golden Coast, something like that. Basically, anyone who's sending you a credit card offer in the mail, chances are it's a bad offer. If it's not a major bank. And if it is a major bank, if it's not one of their premier cards, it's probably a bad offer. For you to get a Chase Sapphire Reserve, which starts at $10,000 minimum, they're not advertising that to you in the mail.
And how do you qualify for that?
For that, you just got to have a good score. Put a little something in the application online.
Gotcha.
Here's the hint: over 75K income.
Okay. Gotcha. Okay.
Yeah.
Nah, this was just full of just eye-opening gems, all of that stuff. And so now, once people do utilize this credit, once they come to you, do you give them options, or you just say, hey, I'm just a funding guy, that's it, you do whatever you want with it?
Yeah. So no, we do have a couple of options. So typically I tell them, this is my consultation as if you were one of my clients. Right? We hop on the phone. 9 times out of 10, you're a referral. You're coming from somebody else, right? Hey, what's up, Jay? I heard you're the money guy. My credit's messed up. I'm looking to buy a house. I'm looking to get a car. I'm looking to pay down some debts. They're coming to you with a reason. If they don't, I ask them, why are we here? What are you looking to do once your credit is fixed or once you have access to this money? If they say anything along the lines of, I don't know, then I start telling them, okay, let's plan. How old are you? Like who do you live with? Where are you at? What are you doing? Because now I need to know, do you have an insurance account? Like, do you have an insurance plan? Do you have savings? Have you saved up at least 6 months of your income for an emergency? 2 years of your income if you're trying to leave your job? Like, I sit down and start talking to them about real world things that need to happen. Kind of like how I told you, I started researching it after I got the client for an apartment. A lot of my clients tend to be like between the ages of 18 to 25. Either before going into college, starting these online businesses, kids making $15,000 a month, but they don't know what to do with it, right? Or either they went and had a whole bunch of money and lost it and messed it up, or they're getting out of college and they're just drowning in debt, or their credit is just terrible, or bad relationship, whatever. There's a million stories. So we have to find out what it is that you're going to be doing. And then from there, I can guide you. I can tell you, well, you can get into the information age. There's all kinds of businesses you can do online. For $60 a month, you could have a fully operating business that'll bring you anywhere from $1,000 to $5,000. If you do this right, it's unlimited income. Okay. Rewind.
Yeah. For $60 a month.
Yeah.
You can have a what?
A fully operating business that could bring you anywhere from $1,000 to $5,000 a month. Do you know what that $60 is for?
What is that for?
Your LLC fees and your systems. You guys didn't know that?
Huh? No.
See, look, now we get into the LLCs. We're not just going to talk credit, huh? We're just going to talk finance.
Teach.
Right? So look, on IG, when you check it out, it says Mr. Work From Home, right? So how do I do that? How am I working from home? I had a work from home job. During COVID, everybody got sent home. I never went back to the office. Right? So I instantly start doing my homework. I find out about Forex trading. I find out about this. I found out that. I found crypto. I made a whole lot of money doing that stuff and NFTs. To this day, I still trade and I still invest. But then I realized there's so much of a learning curve that it comes to this. So I can't promise you that in 12 months, you're going to get everything with that. But I can promise you a good score in 12 months because I'm in control of that. Right? So then I started saying, how can these people actually start scaling this further? Now you get into businesses. When you file and get an LLC, there's a lot of benefits that come to this because I also do taxes and I have tax consultations with people. So credit's just a part of it, right? When you file an LLC, you have W-2 income and then you have Schedule C, right? What people don't know about these Schedule Cs is that if you take losses on the Schedule C, you can deduct it from your W-2 income. So everybody that's looking to get $100,000 in credit, I need you to go get some Schedule C, okay? You're probably already doing things that qualify under a Schedule C and don't even know it. Like this podcast.
Yeah, absolutely.
Right? Like little side hustles, handyman stuff, helping somebody moving, whatever. We can find it. We can make it up. There's probably skill sets that you have out there that you don't know you can monetize. And just by making a couple ebooks, a couple recorded videos, making a Discord channel, adding a couple of robots in it, you can build an entire online business that basically runs on its own.
Simplify it for my brain a little bit, you know.
So let's start from
how does the $60 a month equal, like you said, 1,000?
Anywhere from 1,000 to 5,000.
Anywhere from 1,000 to 5,000.
Okay, cool. So to get an LLC, you just got to go online and figure out, do I want to do business in my home state?
No.
Okay. Or do I want to do business in any state, in any country?
Foreign entity.
Correct. A foreign entity. Cool. What is the cheapest foreign entity for me to file?
Arizona?
Arizona's close. It's like, I think it's like $50-$60.
Yeah.
Cool. So I'm going to pay $60 to get my LLC. What's the next thing on there? I don't live there, so I need what? A virtual address. It's $30. Cool. Do I want my name openly available to the public? Of course not. Registered agent. So now outside of that, what else do I need? I need a business phone number, $10. I need an email because I don't want to be at Gmail. It's not professional. Boom. Another $10, right? $60 a month. You now have the entrepreneur starter kit. You can do whatever you want with that. Okay. Then now we can get into a bunch of other things. What do you want to file your LLC under? Do you want it to be specific or do you want it to be broad? Right? You want it to be broad. So now we get into consulting, right? Now that we're in consulting, what can consultants do? Anything, everything. Okay. until they specialize. So then now we get into the structure of things. You have a consulting LLC at the top, and then you start making smaller LLCs for every other activity you want to do. You want to run a podcast agency, you make a separate one. You want to run a digital business online, you make a separate one for that too. You want to do trucking, make a logistics company. Okay. So that same $60 is now going to charge these other companies to manage them and operate them. Okay. And if you start on the digital route, first and foremost, before you get into anything, it doesn't cost you no money to make a Discord. It doesn't cost you no money to connect any of these robots. It doesn't cost you no money to post on TikTok. It doesn't cost you no money to get on Canva and make some ebooks. It doesn't cost you no money to record on platforms like Loom or Vimeo, quick little 5-minute walkthroughs of how to do this, that, or the third. Right? If you add an extra $12, now you get unlimited watch time where you can record an hour walkthrough for a course on how to do something. For example, Microsoft Excel. Why don't you make a course on how to use Excel for dummies?
Wow.
Believe it or not, that sells. I'm seeing ads about it on Instagram. And I went and I was like, actually, this is super helpful. I'll pay the $6 for it. It had 200,000 impressions.
And you're just putting that into the Discord.
You're putting that into the Discord. You're putting other helpful tips, other pop-ups and notifications, right? I learned a whole lot from these crypto Discords, man. They put notifications on the price of BTC, the price of Ethereum, the price of their NFTs, the price of this, the price of their coin. And then everyone's engaging like, oh, this is fire. Oh, this sucks. Oh, emoji, this, that, and the third. Then they drop an announcement. 300,000 people in this Discord, virtually for free, right? And off of that, they then start posting what their next project is going to be on presale. What does it cost you on a presale?
$0.
Dang thing, bro. So that's what I'm saying. I know obviously I'm kind of going a little bit all over the place, but it's just to like understand that this $60 investment per month that you're putting in has the potential right now with the digital age that we live in to make you as much money as you want. Y'all can look at my Instagram. There's nothing fancy going on there. So how is it that I'm doing it?
I mean, I'm the same.
Yeah.
I'm the same.
Right,
I have less followers than you.
You see what I'm saying? So how does that stuff work? You're just leveraging a little bit of the online presence and stuff like that. You leverage networks, right? And then from there, you just have business structures and things in place.
Amazing. Wow.
Yeah.
Wow. This is a lot. This is a lot, Jay.
So, and here's another thing. So that same $60, why don't you get into real estate? So a lot of people don't know that you can invest into real estate that's like super, super cheap. Like it's almost non-existent, right? Something called, this is going to be a little gem drop. So I'm going to actually be dropping some courses and content on this. Okay. Tax liens.
I've heard of those.
Yeah. It's starting to become a little bit more popular, right? So tax liens is somebody escaped Uncle Sam, didn't pay their property taxes. So you have an option on how you want to pay. Sometimes it's going to be the deed to their actual property. Sometimes a certificate for it, or it's just a little piece of paper that says, hey, you paid their taxes. Okay. Number one, nowhere else outside of a couple of investments are you going to have a 100% guaranteed investment by Uncle Sam. Because you get your money back if you don't want the other options they give you. Number two, nowhere else are you going to find a fixed guaranteed return on investment. So if they tell you over the next 6 months that this contract is going to stay open, you're going to make 10%. You're going to make 10%. You're not going to make 9.5. You're not going to make 6 because they didn't feel like paying you the full 10. They're going to give you 10%. Okay. And above and beyond that, my favorite option of all, if they don't pay, they don't want to pay, and you don't want to take your money back, you can submit a foreclosure on this person's property. And now your couple $1,000 investment turn into a major asset. So again, it's a guaranteed investment. You can contact a lawyer, draw some paperwork, foreclose on the property, and now you own a home for the price of pennies on the dollar.
Wow.
All under that LLC.
Wow.
You can do it as a person, but if you do it under the LLC, it's going to look a little bit different when you make income off of it. Right? So there's those pieces.
geez, there's just so many loopholes and laws and all this stuff that
And it
exists.
all
Like
ties
it's
right back
crazy.
into credit too, which is the crazy part. Because now you've got assets under management in a business. So now I can lend you more money. I can get you $1 million. You've got 500K in this crib sitting here. How do we find out that there's 500K? You get an appraisal, right? Off of that appraised value, you can then walk into the bank and start asking for money. And that's how you get home equity lines of credit. That's how you get, mortgages and so on and so forth, right? Cash out refinancing. That's how all this stuff works. It's all related to credit and also the equities and securities of things that you have.
Got it. Damn. Damn.
Yeah.
Jay, I appreciate you just dropping knowledge, dropping gems. Like, I need y'all to really understand that he came on here and just went crazy. Like, this was, we've had a great amount of credit based individuals on here, and the way you articulated certain things, like, wow.
I could be wrong here, but the reason I like to do that is because I remember what it was like in my shoes trying to figure this stuff out, man. It was like pulling teeth. And I have a philosophy about myself, right? Where I should just be able to give this to you however I want, no matter what. I should be able to give you everything, and I want you to succeed, because now it's going to pique your curiosity. You're going to say, what more does he have to offer? So if I just gave you all this knowledge and I told you how to implement it too, because if we have to get into that, I don't cap in my rap. I'll tell you exactly what to do to get the result. If I gave you all of this stuff at no charge, imagine what's going to happen when I do. Imagine how much access you're going to get when you do pay for that access, as opposed to having to pay for everything from the start. I won't even have a conversation with you until you pay. That's just my philosophy. I believe the world would be a much better place if people kind of operate a little bit different.
Absolutely. Leading with value.
Yeah.
That might be one of the name of this episode. Leading with value. I like that. No, damn, Jay, I appreciate you for coming on the show, man. Dropping knowledge. If somebody did, which they should, want to tap in with you, learn more from you, learn about you, work with you, all of that stuff, where can they find you at?
On Instagram, Jay is driven, JAYIS driven. You'll see a little purple Urus on it. Okay. That's pretty much where I am spending a lot of my time. Outside of Instagram, you'll find me on Facebook and Twitter and stuff like that. And then we also have private community access. So interesting enough, we're going to have a little project coming around about that, where you guys will be able to kind of join the community and get access to all of these different services and goods and information that we're going to be offering. And I'm sure we'll do a couple more episodes, right?
Absolutely. And if I'm not mistaken, you're part of the Audience Growth Tour.
Yes, I am.
He's part of the Audience Growth Tour that is coming to Miami June 7th and 8th. And so, listen, you'll have me teaching, you have Brendan teaching, you have him teaching. Just those three alone. There's other speakers. Yo,
listen. They want to take advantage, because I'm planning to show up to multiple legs of the tour. And each one I'm going to talk about a different topic. So notice we bounced around. We started with credit. We haven't gotten into any investments. We didn't get into the real estate. We didn't get into taxes.
Damn.
Right? We only talked primarily credit. We haven't talked business operations.
We might have to invite Jay back and have like a whole playlist of just Jay's driven. You know what I'm saying? Like, wow.
Yeah.
Okay. Yeah. Amazing. I appreciate you for coming on the show, dropping the gems. Make sure you're tuned in. Share this with a friend. Don't keep knowledge to yourself, because especially if you're somebody that's not executing on a high level, share this with somebody who might, because you might be an authorized user on their card when they actually do it. And so just take advantage of this. It's your host, Mastermind Mitch. Oh, wow. I messed up my own name. Wow. Mastermind Rich, Moneybag Rich. We're here in the building. This is Attractive Mindset. And as we always say, we look good, we live good. Life is good. Talk to us. We talk back, and we out.